At 11:55 p.m, AFR confirms cash negative interest rate conspiracy. Martin North, John Adams, in the interest of the people. Hello, John.
Hello, sir.
We just can't let this one lie, can we?
No. The thing is that we are at 5 minutes to midnight before the inquiry finishes into the cash ban, and we have a article that came out in the AFR today, and I saw it online, and I thought it was significant that there's an article by Ken Rogoff, who I quoted in my testimony to the Senate, and he is one of the leading global advocates for negative interest rates. So, and he's called for the elimination of cash. So here we have the AFR, Mr. Patrick, on 2 occasions last year, but also last week, calling us conspiracy theorists, saying that there's no connection, there's nothing to see here, and then the same publication is publishing the former IMF chief economist, who is quoted in the Black Economy Task Force final report. And what are the reports that we'll go into, but it basically says that this is all about making monetary policy more effective. Well, what is this all about? It's negative interest rates. And he's in the AFR today arguing again for why negative interest rates has to be the policy solution that the central banks around the world have to go that they have to go to, including the Reserve Bank of Australia. Right, and timing, of course, is we're 2 days out from the final report relating to the cash ban. Correct.
Right. So one might suspect that there's a little bit of influencing going on here then. Yes.
So I find the timing very suspicious, but we'll get into this in a second. I think Aaron Patrick has been completely exposed, and for calling us something, and yet his own paper is basically pushing the same arguments we're saying that exist, and he's calling it a conspiracy theory. But so obviously, like, the first question with this conversation is, why is Ken Rogoff important? So as I testified last week, Ken Rogoff was quoted in the Black Economy Task Force final report. So this is from Chapter 3, page 48 of the Task Force report. Quote, some economists, including Ken Rogoff, former chief economist of the International Monetary Fund, argue that financial stability and the effectiveness of monetary policy may also benefit. That was in relation to why should we be eliminating cash? What's going to benefit the effectiveness of monetary policy?
John, let me just stop you there, because of course there was a very interesting debate about whether the cash ban has anything at all to do with negative interest rates and monetary policy, right? And in fact, a number of people claimed nothing at all, right? Yeah. And yet, in that task force paper, there's a direct link to it.
Yes. So the task force report quotes Ken Rogoff. Now, Senator McAllister asked me, point blank, and she said, I find it a bit of a stretch to how do you link this direct piece of legislation to this issue of negative nominal interest rates. And so we went through a couple of points. One is, if you want to do a transaction above $10,000, you've got to go through the banks, and the banks will going to charge you some sort of fee for that. Two is, we are seeing a range of people, and I didn't get a lot of opportunity to talk about this, and I know you've been getting the same correspondence I have. We're getting many reports across the country of people wanting to take large sums of money out of the bank in physical cash. Now, I gave one example, but there are many examples, and you're getting emails also of people wanting 50,000 in cash, 20,000, whatever the case may be, and the banks, these branches across the country, are putting up huge roadblocks in terms of why they won't give cash, or they've got to go through hoops, or the banks are saying, what are you going to do with the money? And they say, well, we need to know for anti-money laundering purposes. And customers are saying, it's none of your business what I do with my money. Just give me my money. And I know this happened, in Adelaide, because I spoke to someone that went through this with one of the big four banks. They were told point blank, if you do not tell us what are you doing with your money, we will lock your account. So there is a clear set of examples anecdotally across the country where if you go to the bank and looking for tens of thousands, if not hundreds of thousands in cash, they will put up roadblocks to stop people from having access in terms of money.
So John, let me make a couple of points there. The first is that yes, I've had a bunch of people send me messages with regard to difficulty getting cash out of the bank. And I think I can put the messages into two different categories. The first is relatively small sizes of withdrawals, $5,000, $10,000, $15,000, $20,000. May sound a lot, but relatively small. And in some cases, people are saying that they have to give 3 to 5 days notice. And that's because the bank needs to bring the money into the bank because they don't hold that much in the banking system. Now, that's a bit of a change from practice a few years ago where effectively each local branch would hold a higher float on the premises. The second is where people are trying to draw a larger amount out, and that could be 15, 20, 30, 40 or more $1,000. And there, the banks are very, very concerned about terrorism, anti-money laundering, and also, particularly if people are older, they want to make sure that they're not being coerced, because around the world there is a focus now on banks protecting customers and making sure that they are not moving money around under duress, and that could be from relatives or it could be from criminal intent. So both of those factors there need to be borne in mind. But the bottom line is that if you've got money in the bank and you want to get it out, there is absolutely no guarantee that you can go in and get it straight away. And the banks are very much controlling more than they used to years ago. I think that's a big deal. And by the way, I don't think the banks have been very good at communicating that broadly to their customers, because customers still assume, quite rightly, that the money in the bank is theirs, not the bank's. In practice, it's sometimes very hard to get hold of it when you want it. And frankly, if the cash ban does come in, then that's just going to make things a lot worse, because I know that there's the regulation that allows banks to be able to move cash. But of course, the government could remove that regulation and therefore restrict cash transactions over $10,000 in and out of the bank. And that would be a big deal if they did that.
And so that's important, because if negative interest rates come in, and then at that point you want to withdraw your money, it's going to be harder to actually try to get your money to the bank. And then the other point I made, and we really haven't gone into a lot of detail about this, is that Section 8 of the rules, basically, that is the section that makes the banks exempt from the cash ban. And so at any time that Section 8 is turned off, that's when it's illegal to withdraw more than 10,000. It's illegal to withdraw more than 10,000 out of any sort of banking institution. So that's Section 8. That's quite critical. So these are the linkages between them. And obviously, this is all about trapping money in the banking system ahead of negative interest rates. This is the alleged conspiracy. But Ken Rogoff is in the AFR talking about negative interest rates, and so to move on from what he said, how he was referenced in the Black Economy Task Force final report, there's an article he wrote for the Wall Street Journal in September of 2017, where he talked about the need to eliminate large denominations of bills like $100, $50 in order to make negative interest rates more effective. Quote, "Another advantage of eliminating large bills would be the effect on monetary policy. The Federal Reserve should be able to implement negative nominal interest rates vastly more effectively in the absence of large bills, which could prove quite important as a stimulatory tool in the next financial crisis." Now, the interesting thing with this suggestion is, now, the cash ban is not the elimination of bills, but the Black Economy Task Force actually looked at whether they should cancel the $50 bill and the $100 bill, and they said no. Now, how do we know that our task force, the Australian task force, looked at that? Because this was revealed last week by Treasury. So, and this was the division head of the Black Economy division within Treasury when he testified in the afternoon. So let's actually go to that quote. So Patrick Boneham, he said, quote, "It, as in the Black Economy Task Force, also looked at alternatives to the proposal. It considered banning $100 notes, and it said no." So they looked at the Ken Rogoff solution, and they said, we don't want to go down that path. But all the initiatives that we're seeing behind the scenes around trying to push Australians into the banking system, it is all designed around this whole theme of negative interest rates. And it's all linked back to the central premise of where we first started nearly 2 years ago, or a year and a half ago, in terms of our first show on Walk the World, the largest debt bubble in the history of the world. They believe that they need more stimulus to keep this bubble going, and they're running out of ammunition, and so they think they need negative interest rates to try to keep the bubble alive.
Yeah, and we know that that's not going to work, right? Because essentially you just keep inflating the debt until it gets to the point where it's unsustainable and it falls in on itself.
Correct. Now, where to go to here is the piece today. Now, one of the things we have seen over the last year to year and a half, and we've talked about this on several occasions, is the governor of the Reserve Bank of Australia has said on multiple occasions that there is a limitation to how much monetary policy can do, and that if we do need more stimulus, it has to come from Canberra. So the central bank in this country is saying to the federal government, run bigger deficits, try to pump this economy more, particularly with spending on infrastructure, and that should keep people employed, particularly as we see, a downturn in the construction sector. So we, to keep the bubble going, we need all these people who are in these sectors that are a part of the bubble, like retail, like construction, and we need to find alternative jobs for them. Well, the theory of the central bank is, how do we get these people jobs if the private sector can't provide them? Well, we'll use the power of the budget to artificially create jobs through infrastructure that we can keep these people in jobs so they can basically keep servicing all these mortgages so that the debt bubble continues. Now, what Ken Rogoff has said today is that solution, there are real big problems in terms of going down that path. So some of the problems that Ken Rogoff has sort of specified is fiscal policy. Fiscal policy can be quite messy. There's huge political debates. You do have huge compromises. It does take time to actually try to lock in some of these budget deals. And if you have a democratic election, a new government could easily reverse whatever fiscal policy package that has been implemented at the time that package is required. So he's basically saying that because of what he calls political economy, fiscal policy is an ineffective tool to keep the bubble going. And again, he doubles down on the need for negative interest rates.
Yeah, very myopic point of view that he has, right? Because basically he's saying negative interest rates is the answer.
Yes. Now, and so in the last paragraph of the piece, there is a key quote that sort of rang alarm bells in my mind, and I thought that it's important that we do this show today just to alert the viewers to it. So let's go to that quote. Quote: "The right solution is not to cast aside monetary policy, but to find ways to strengthen its effectiveness in a low interest rate environment, possibly by finding ways to use negative rates more fairly and effectively." So the AFR, who calls us a conspiracy, they call us conspiracy theorists, today publishes one of the lead advocates of negative interest rates, and is saying we need to implement negative interest rates fairly and effectively, and we can't rely on fiscal policy. So I think this is significant from a couple of angles. One is, in terms of what we just said, we've got the biggest bubble in the history of the world, and macroeconomists are saying we need more stimulus to keep the bubble going, otherwise we're going to have the biggest depression in world history. And in terms of point two, the RBA governor has said, and not only the RBA governor, but there's, there are people, some people in Parliament and people in the banks as well, are calling on Canberra to basically, abandon the surplus, increase the deficit, and try to keep the bubble going using fiscal policy. And now you're having Ken Rogoff, former chief economist at the International Monetary Fund, saying that is an imperfect solution because of the time it takes, and because of how messy it is, and because it can be reversed through a democratic election. And we know central banks don't like democracy, and so obviously this is the whole thing about independent central banks and independent sort of in terms of APRA. They want all these things to be independent from Parliament, so that they have full control and they can sort of guide these things the way they want. So Ken's basically saying that if you want fiscal policy to be used as a short-term stimulatory tool that has to be calibrated in a very nuanced way to get a right outcome, politics in Parliament and democracy is actually going to make this tool very ineffective. So therefore, don't rely on fiscal policy. It has to be monetary policy. Everyone's nearly at zero, and we have to go negative. And obviously, by virtue of that, to make these negative interest rates work and be effective, cash has to go. He's said this consistently, and obviously that's where this cash ban comes in. So with 2 days to go until the inquiry ends, a couple of final points to make is, one, I think Aaron Patrick has been completely exposed. He's been running propaganda to cover the central banks, to cover the commercial banks, and when he says we're a conspiracy theorist, well, his own paper is basically publishing one of the leader advocates of all the stuff we've been relying on. And we didn't have the video for the testimony, but I had over 200 pages of documents. All the sources we use on the show, I gave them to the Senate, and I said, we're not making this up. These are the documents. And one of the things that Aaron Patrick didn't say in his piece was, I had some spare packs of all these documents. I gave him a pack. So I sat down next to him after my testimony. I said, these are the documents that prove that we're not engaged in the conspiracy. I gave these documents to the senators. Would you like a pack? He said, I would like a pack. I gave him the pack. Now, did he use any of that material in his piece to attack me? No. Did he tell his readers that I gave him this material? He did not. So if anyone is a subscriber to the AFR, you are subsidizing the PR agency for the power structure, for the banks, for the central banks, etc. So let there be no doubt that everything we have been saying for the last 6 months on this issue is correct. Ken Rogoff is in the Financial Review today arguing for negative rates again. I mean, the RBA in December testifying to the public hearing said that they're relying on this language that the RBA governor used in November, that it's extraordinary, unlikely that negative rates is going to come. Well, no, negative rates will come, and the process of trapping us in the banks is clearly underway, and this all comes down to whether this cash ban becomes law or not. It comes down to Albanese and in terms of the ALP. And so the core question is, will Labor sell out the Australian people to the banks, or will they actually stand up for the people? And we know that they are under huge pressure to reject this. They are getting calls. They got a lot of calls yesterday. They got a lot of calls on Monday, and so. But we also know that before the last election, they took hundreds of thousands of dollars, more than $500,000 from the banks. So there's a massive financial reliance in terms of funding from the banks for the political party, but also, you've got that, they want to be seen to be sort of with the people, populist, kind of like the Corbyn model. Well, if they vote for this in the Senate, their claims to be, if they try any sort of narrative to say, well, the coalition is pro-elite and we're actually standing up for the people, that narrative is going to completely collapse. So, there are a couple of things to do for our audience. We've got 2 days left until the inquiry ends, and then we will see what the inquiry report says on Friday. Then we'll see what the government does next week. But, if people have the opportunity to call Albanese's office, to call Labor senators, to call Green senators, take my testimony, look, that's on our YouTube channel, share it around, tell your friends and family. Again, one of the points I made at the hearing was millions of Australians have no idea that this policy, this cash ban is on the table. And so the more Australians know about what the real agenda is, the better chance we have to actually defeat it before it's too late.
Yes, and to underscore, mainstream media has done Australia no service at all on this, right? There's been almost no coverage of this, and where they have covered it, they've covered it very gently.
Yes.
And of course the AFR, as you say, is just going into bat for the government and for the banks. So it's down to us.
Yes. One final point on that is that, so I did say last week that Germany rejected the cash ban in 2016. One of the big reasons why that happened in Germany was because one of the lead newspapers took an editorial position that they were against the cash ban, and it was the press that led the public campaign in Germany. So the press has abandoned liberty, abandoned its readership, whether it's TV, print, or radio, and so it's been a movement of the alternative media to actually inform the public and to actually lead the charge, and the people will have to fight for their freedom, and here we are 2 days out.
Yep, in the interest of the people, we'll go right to the end of the road with this. It's so important.
Absolutely.
John, I appreciate your time today.
Thank you.
Martin North, John Adams, the interest of the people. We'll see you next time.